The dollar and a violent move in gold and silver has shook the markets massively. When gold makes record highs and then gets hit this hard, it's not noise. It's the market repricing risk and policy expectations fast. We'll break down what drove the whiplash, what it usually means for risk assets, and what charts need to confirm next. Hello, everyone. Welcome to Strategic Markets and our Wednesday session. Today, first thing that we have on the chart is the gold chart. And you can see that as of last week, we had some reversals and we had a red candle, but we are starting to recover again. And we have started hitting 5,100 nearly over here. And we are moving back into this particular zone of growth. Why is that particularly happening? Well, at the end of the day, people are still seeing gold as a bit of a safe haven investment. And that's because of still the policy and the geopolitical uncertainty, especially with relevance to other USD weakness as well. Because as you can see over here, look, to be honest, US did shoot down an Iranian drone as well, which caused some military issues. And now, people are wanting to have a bit of a safe haven bet. And it is likely that they could be flocking to gold because of that. What about our other favorite commodity, silver? Well, silver as well, it did have a recovery, not as strong as gold. And I'll let Steve jump on that a little bit later. But yes, you can definitely see that commodities are having a bit of recovery. And that could be because people are still wanting to prefer their safe haven bet. Another very interesting point of news. Trump has signed a bill to end the shutdown for the government. That basically just means that, look, last time it happened, we were at this particular point, the government shut down for 40 days, and that affected liquidity in the market a lot. So in this particular case, now that we know that the government shutdown is not going to be very long, in fact, the only issues that we're having is regarding the immigration control. Otherwise, everything else seems to be back to normal. That's reasonably healthy news for the market. Let's see how that particularly goes. Another thing up for discussion is obviously Trump has nominated a new Fed chair, which is Kevin Warsh, and that looks to be he will be starting off as of May. Now, did this have an effect on the market? It definitely did. It did strengthen the dollar, and that did have an impact on equities as well. Reportedly relevant to a sharp sell-off. So we're just going to have to wait and see how this plays out over the next couple of days. But yeah, I have to say this wasn't just metals. It was a live repricing of the Fed path plus confidence plus your risk premium, which has spilled into stocks and crypto. And although crypto strength was already in play prior to the wash announcement, we are just going to have to see out how it continues to play out over the next couple of weeks. Basically, to summarize, we've got our safe haven bed with gold, which is coming back to that 5,100 level because the US policy and geopolitics are currently at play. The policy shock and the Fed narrative shift has definitely flipped positioning a little bit. USD has strengthened. Metals were hit hard, but they're starting to come back in. So we are seeing some flattening of this noise, and people are choosing a direction. And look, at the end of the day, with the commodities having the decline, it could have been much more to people choosing their positioning or rebalancing, as well as a little bit of forced deleveraging as well, if you are a margin trader. So that had an impact on the market, likely last week. How it progresses ahead moving forward and how people manage their risk, again, that is just has to be played out. Whether the metals just have a dead cat bounce or they're going to have a continuous upward momentum, we're just going to have to see. And Steve's going to cover that a little bit more in today's later session. The market mood, well, they're actually still debating whether it's a risk on continuation or whether we are just going to be in this uncertainty regime. Now, personally speaking, I'm going to be honest. I have been very on the thoughts that we are risk on and we're going to have a great bull market. But as I'm seeing this weekly news consistently happening, I have to actually review the data that's been given to me. And as much as I like to be a hype man who just wants things to go up all the times, even I'm having to learn patience and move with the markets as it comes. So definitely, I'm just going to have to see the way the things go. And I can't say with certainty that either we're risk on or we're risk off right now. So let's just see where we are at, and as we progress, we build. a outlook. Lastly, crypto review. Look, when the dollar strengthens and policy uncertainty rises, crypto often does play like a high beta risk. And at the end of the day, we've seen that BTC is gone down a lot. If I were to just show off a chart over here, we have, we're going down 7,500. We're testing some price support over here. Steve's going to cover that a little bit more. But the funny thing is, look at that. The SPX coming up just below 7K, like exactly where it was last week and very relatively close to the week prior as well. But crypto has just fallen off a cliff over the weekend. So yeah, at the end of the day, even though equity markets might be rebouncing or they might still have faith, crypto has definitely been a painful journey, and I'm not going to take that away from anyone. So I'm here with you. I feel you. And we're going to get through this together regardless of what happens. But on a separate topic as well, for the Aussies who watch the show, and we're in Australia too, very interestingly, the Reserve Bank of Australia has decided to raise interest rates today. Now, what does that mean? America cut, the UK cut, even the EU and Canada has cut. But what's Australia decided to do? Well, we have actually decided to raise our interest rates by 0.25%. And at the end of the day, that's definitely going to have an impact. Like $105 extra each month, someone's going to have to pay on their 700K mortgage. And why is this happening? Well, basically, our government spends money like it's free. So Aussies are having to pay the price, and one of the ways is through our mortgage owners. So where I'm really interested to see how our next meeting for the RBA in May pans out and whether we're going to have another rate hike and the amount of pressure that's going to put on Aussies. But yeah, just relevant to news all around the world, one country is definitely still hiking rates, and that was very refreshing to me. On that macro news and outlook, that is all the summary that I have today. I'm going to pass it over to Steve now.
All right, thanks, Yash. Yeah, and that's a really interesting point to actually leave on there as well too, in terms of the RBA hiking things down here in Australia. We've actually been discussing that for probably about the last 6 to 9 months on the ASX Traders United forum, and a lot of people have been looking at me going, "You're an idiot, Steve. You're the only person who's actually saying that we're actually going to have hikes down here in Australia." And it's like, no, we will. And sure enough, it's actually happened. Reason being, well, we have got the highest inflation of any OECD country in around the world, pretty much. And that's just basically the situation. Let's start off with gold and silver as the first charts to take a look at overall. Now, this is really, really fascinating. Does seem to be a bit of a divergence going on in the metals themselves. Gold, you can see, and I'm going to enlarge this. Gold overall appears to be trying to reclaim support. This is really, really fascinating. You can see that in terms of that baseline. You can overall see that with the Ichimoku there, it's attempting to reclaim it. So it looks as though there's some strength in relation to gold, attempting to get back into some positive territory there. So that's really aligning with what Yash was talking about in terms of the geopolitical aspects. So totally agreed in relation to what's going on there. Silver, way, way below. So I'm still personally thinking, and I'm definitely aligning with what Yash is saying there, whether or not we're going to be seeing potential what they call a dead cat bounce in terms of what we see in terms of an upward bounce there, and then potentially just falling flat on its face. That could be exactly what we see overall in terms of silver overall. So let's see what does happen there and whether or not this potential aspect here of what we're seeing with that baseline area acts more as resistance rather than a support level in terms of seeing if we can reclaim it. It would need to do quite a lot in order to get from where it is now at $76.96 per ounce way back up to $86. It's quite an ask in order to get right back up to there. So that's a really fascinating aspect there. On top of that, if you take a look at the moving averages, they're pointing downwards. That's really, really bad in the short term. So it's got quite a lot to get against overall there. If you take a look back at gold, you can see it's acting more as a support aspect in terms of even those short-term basis. So it's actually looking more positive in relation to gold in terms of a supportive aspect more than anything. So not bad aspects there for gold overall in terms of the support aspect. Looking across over at Bitcoin, I know you've got a big fascination, my friend. Now,
Mm.
this is actually looking fairly decent at this point in time, but still be wary of dead cat bounces aspect here as well too. You were alluding to last year's support levels. Actually, to tell you the truth, there's support levels even prior to that. We're
Mm.
more in terms of back to 2024, in terms of really, really heavy support levels back there. We're talking about support levels at 73,000, which has actually really bounced off just yesterday. Okay, really, really hit it right there. And that was 73,130 in terms of Bitcoin overall. You can see the tail hitting it right there. Okay, so that's something now. I'll just enlarge it so you can really see it. So it really, really hit smack bang there. Ethereum did the same thing. It actually bounced directly off a support level from April 2023 and bounced right off it at that point right there too yesterday as well. So we've got potentials of dead cat bounces overall if it can't get back above it. Now, why am I saying that? Because take a look at what's above. You've got the support level that it actually just broke through over the last few days. So support levels that it breaks through then become resistance levels. And they need to actually break up above that
Yeah.
before it can reclaim that and then use them as support to be able to actually then launch back. And that's essentially how support and resistance works. Okay, you can think of it like floors of an elevator. Once it actually gets past one level, then it goes up to the next level, uses the last level as a support level to bounce back off.
Mm.
Like how support and resistance works. So that's the essential aspects in relation to Bitcoin and Ethereum. The dollar, really, really fascinating here. You can really see all of these support levels coming through in terms of the moving averages aspects there. If we go back to Ichimoku in terms of the dollar, you can see it's battling right against that red baseline right now as well. That's acting as a resistance area right now at this point in time. So as you can see, we've got all of these resistance areas, support areas that they're tackling at. We're literally range bound at this point in time until we break out of all of these support and resistance areas. That's essentially where we are at right now. But what's really fascinating, once again, is when we take a look at the indices, like we did earlier in the week as well. Okay, or beginning of the week on Sunday, because what's essentially happening here in terms of all the indices is taking a look at the SPY firstly. SPY hasn't really done much since Sunday. It went up a little bit and then it's come right back down again, essentially to where we were pretty much flat since Sunday.
Mm.
Okay, because we've only had a couple of days of trading since then. But what it's essentially been doing since then is bouncing off that baseline. The Qs, on the other hand, are really showing a lot of weakness. Last night's trading in particular, extremely weak. We've actually sunk beneath that baseline, that red line, quite strongly too. Last night fell 1.5%, but enough to really go right through that baseline and cause a lot of stress. On top of that as well, the moving averages have turned downwards, and we're now testing this 100-day moving average being that white line. So that's really fascinating. But conversely, take a look over at the Dow. The Dow's now actually turning upwards, even though it was a red candle last night. But it's actually now, with the moving averages now starting to turn upwards, all of them starting to turn up. So we're getting a bit more strength in the Dow, which is really fascinating. But now, remember we were talking about the Russell actually being quite weak? That's actually now starting to turn upwards.
Oh, wow.
Exactly. So this is really, really fascinating. And on
Mm.
top of that as well, if you take a look at the Ichimoku, it's now trapped right in between that Tenkan-sen and the baseline. So we're range bound all the way around. Okay.
Mm.
But this is where things get really fascinating. Remember, the Russell is always, and I'm going to take all of these lines off because I love using a lot of lines when it comes to the TLT. It's all in relation to interest rates. When the TLT goes down, interest rates are going up over in the United States. Always remember that. Okay,
Mm.
relationship between bonds and interest rates. So TLT is the bonds, 20 years plus bonds. Bonds are going down overall. Also note that there was a dividend paid on the TLT, which is the reason why it also went down a little bit more.
Mhm.
That was paid a couple of days ago. And you can see that it's gone down further, that red candle there. So overall, bonds are going down, and Russell's now going up. Okay. So interesting thing that's going on there. So interest rates are actually technically going up on that particular day, but I suppose it's actually going down on that particular day in terms of the interest rates because the bonds have actually gone up.
Mm.
Now, we'll have to wait over the next few days to see whether this trend continues in terms of interest rates still potentially going down and the Russell's still going up? Can it now break out and continue going out? These are the kind of things to keep an eye on and see what's happening there. So in the grand scheme of things, now what do we need to basically take a look at? Well, overall, what we really need to be considering when we're taking a look at all of these circumstances is we can still break it down in terms of long-term investors, the same situation and the same, I suppose, plan as what we were looking at even over the weekend. Still see whether or not your plan is in place. Is there anything that needs to change? That hasn't really changed much overall in the grand scheme of things. But when it comes to conservative and aggressive investors, what you basically need to, I suppose, take a look at more than anything is can you still take advantage of any of these moves that are going on in the markets overall? As we've alluded to, taking a look at all of these charts, there's a heck of a lot of support and resistance areas to take into consideration. Are we seeing any breakouts one way or the other? Is there anything going on in relation to all of those aspects there? That's probably what anyone should be looking at in relation to either the conservative or the aggressive investors, and then being able to take advantage of any of those moves that may be going on overall with those. There could still be a high probability of chop until those support or resistance areas are broken one way or the other. So, all the best with the trading and investing that you can go on with those there. And with that, mate, I'll pass it back to you.
Agreed, Steve. Now look, this week was the market repricing policy risk in real time. The dollar and metals moved first, and now we watch whether stocks and crypto confirm, which leads next week. Gold, stocks, or crypto? Comment one word, and we'll build that into the next episode. This isn't financial advice, it's how we think about the markets.